Hi, I am Ernie Nagratha from Trowbridge, and today I will be speaking about tax implications for non-resident owners who own rental property in Canada. The important thing to note is that there are specific non-resident withholding and reporting requirements. One is able to rent the property as a non-resident to a third party as long as they meet these requirements. As a non-resident of Canada, if an individual owns and rents a Canadian property to a third party, it will be subject to a 25% withholding tax on the gross rental income. The 25% withholding tax amount needs to be remitted to the Canada Revenue Agency by the 15th of the month following the month of rental and is paid by the property owner. Some individuals choose to reduce the withholding tax by filing the appropriate NR6 form by the first due date of the rental payment. Attached to the NR6 form, non-residents are asked to attach a breakdown of the anticipated rental income and expenses. In the event the expenses exceed the rental income, the withholding tax could be reduced to nil. You must have a tax withholding agent in order to file an NR6 form. There are no tax implications when acquiring properties. However, upon selling a property, it is important that the taxpayer be aware they must file a Section 116 certificate with their accountant or lawyer if they are selling as a non-resident. There are penalties for non-compliance. As well, they must file a tax return for the sale to report the gain or loss. The issue is having to pay taxes on all the income generated outside of Canada. The first step is to determine if the individual became a non-resident of Canada for tax purposes when they departed Canada. This is based on evaluating the individual's residential ties. Assuming they became non-residents, they would need to file a departure return for the year of their departure. The important thing is to ensure they are meeting the tax withholding and reporting requirements as a non-resident. A non-resident is able to own property and rent a property to a third party. By meeting these requirements, they are demonstrating to the CRA that they are a non-resident by not having a home available for their regular and continuous use. Their income tax obligations to Canada are based on their residency status. An individual's residency status is determined on a case-by-case basis, and the individual's relevant facts must be considered. The relevant facts in determining their residency status include the residential ties they have in Canada, the purpose and permanence of their stay abroad, and their ties abroad.